My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Prepare for the worst, expect the worst. Hey, that's been the market's attitude for weeks now, as the Fed methodically continues raising interest rates to cool down the economy. I know that sounds crazy on a day where the average has ultimately spiked into the close, Dow surging 932 points, 930 points, S&P was soaring 2.99%, and get this, NASDAQ rocketing 3.19%. But there's always a sigh of relief when the Fed does exactly what we expect them to do, even if it's the largest rate hike in 22 years. And it can be even more than a sigh of relief. It could be outright buying when something unexpectedly positive occurs. And we got that today when our own Steve Leisman asked if the Fed is thinking of going 75 basis points at the next meeting. Talk about prepare for the worst, expect the worst. Then, with the market teetering and readying for itself for another plunge, and you all saw it about to happen, Jay Powell took the 75 basis points off the table. We were off to the races, including those who know it is paid to be short at every turn this year. It was amazing. It really was. And I was watching, and I was thinking, all right, it's going to go down, going to go down. What could save it? What's going to save it? The shorts are coming in, the sell, and the futures got, boom, close. Case closed. No 75. Me. Well, after a day like today is put behind us and a 75 basis point hike is no longer ahead of us, I get to go back to earnings season mode, even if we've already got this non-farm payroll report being gamed about from Friday. And from my observations, until the 75 basis point potential hike was removed from the game plan, I can tell that we weren't getting the kind of pin action that I hope for when I go bowling, as I did just last week. What does that mean? Well, you can't get a 207 or even a 310 in this outfit, even if, like me, you have your own ball and shoes. Or put it together another way, before the 75 basis points were taken off the table, you could go bowling, hit the AMD pin, and it would just fall like a dud without hitting the NVIDIA pin, as if the two in the same business didn't share the same joy of strong orders as they do. But we found out that Jay would be measured, something I've been telling you all along. Then NVIDIA pops almost 15 out of nowhere. Boom! Right on the 75 base. You can look at the Q. Look at the time Q. It's incredible. Just when that happened, suddenly NVIDIA's worth 15 more points. It's nuts. But it's how much the market cares about rates versus facts. And it's hard to believe because it's just so stupid. One thing is sure, though. By 9:30 tomorrow, we will forget what Powell said entirely about the next meeting, and we'll start focusing instead on some other thing that is equally as irrelevant. Why is this? Simple. Because people are unsure what a 50 basis point rate hike will actually do to the economy. So starting tomorrow, we'll once again prepare for the worst and expect the worst. And people talk about how people will buy fewer homes or fewer cars or whatever, because that's what people do. And as long as money managers are unsure, which they are, they'll keep selling things that they shouldn't. Today's late afternoon rally notwithstanding, Wall Street's bias here remains very negative. Now, I've seen this kind of moment many times in my career, so I know exactly what's going on through the heads of the big trigger pullers. So I am going to just tell you, I am going to give you a deep dive into their cranial structure and tell you not how stupid they are, but how they think. If you think they're stupid, good. All right, first, there are people who feel that this whole situation has gotten out of Jay Powell's hands. They watched him talk about how inflation should flatten out today. They didn't even want to bother to listen. See, because they've made up their minds that Powell is out of touch, that he's lost it, that he is a stooge, a lackey. Like Paul Tudor Jones, a great guy, billionaire philanthropist, who said yesterday that the lackey stooge Fed chief should resign. These people are sellers of everything. After the Fed meeting, they were mostly grateful so many others were willing to take Powell seriously, give me a chance to be able to ring the register at higher levels. These guys see Powell as the ultimate lightweight, who's so far behind the curve that he's made himself irrelevant. Because he's so late, they think we're in for a repeat of the late 70s. They keep talking about early 80s. I was alive. I traded then. It's very different when the Fed had to take rates to the low teens and wreck the economy, get inflation under control. I bet some of these billionaires who think Powell is a total stooge and lackey have some gigantic short positions here, although they won't want to talk about them. So camp number one is Jay Powell's a stooge. Okay, then there's the second group. They think Powell's irrelevant for a different reason. Between the lockdowns in China and the war in Ukraine, the global supply chain is so messed up that there's not much the Fed can do to get inflation under control. They don't blame Powell. They see this as a total force majeure situation. Now, these guys are wild sellers. Now, I'm going to let you into something, but I'm going to whisper because I don't want everybody to know. I just want you and me to know, okay? And don't tell anybody else. These are people who fear that Russia is going to drop a tactical nuke on Kyiv, okay? These are people who fear that China is going to invade Taiwan. These are people who think that our country's weak and the Russians are strong and China's strong. They'll never say this stuff out loud because it makes them sound like they're crazy. But remember, this is just between you and me. But this camp is secretly very afraid. They wake up afraid. They go to bed afraid. They think millions are about to die from the madman in the Kremlin, and unless he's killed, World War III is here. They also don't care what Jay Powell says because Jay's not talking about how everybody's going to die. Now, look, other than Billy and the Predator, that everybody's going to die thing doesn't wash with me. Can we have all those horrible things? Oh, we can have every horrible thing. Anything horrible can happen. But these people are sellers because of China and Ukraine and this. They changed the numbers on me, so I have to look around. Where's my scared? All right, well, it's in here somewhere. They're scared. Better do a little cinema verite and pretend that I know where the button is, right? But they're scared. They just don't want to tell you because they're afraid to even tell you the truth. But they're scared. All right, then there's a third camp. These are the people who think that Powell must crash the economic plane because the economy's too hot. As they see it, they've got 11.5 million job openings and only 6 million job seekers. So while Powell can talk a good game about a soft landing, they just don't believe he can break inflation unless he aggressively jacks up interest rates. They wanted the 75. They wanted the 175. They want the 275. This third camp wants to sell everything into strength because when they hear kill inflation now, they take it to mean kill the economy now. They want 1,000 basis points. And they want anything. They are pulling for a crash landing. Got stooge Fed, scared to death camp, pro-crash landing. All right, there you go. And then there's my camp. I don't know. How about this? I'm the constructive camp. I think the consumer's strong. Jobs are plentiful. I think Powell can raise rates reasonably with a decent time frame, do a great job. I think prices will then come down. Financing for autos get expensive. Funding for autos is expensive, so maybe we won't have a car shortage. And we'll have too many used cars, as some of the used car dealers go under. If you want to borrow money to start a business and it's reckless, you might not get the money. There'll be less buying of stocks on margin. There'll be plenty of people who leave the stock market because they need the cash. But I think leaving the market's a mistake because Powell happens to be an incredibly thoughtful, good public servant who's doing amazingly. For example, he did take off the possibility of 75 basis point triple rate hike off the table, right? In my camp, we respect his judgment and his knowledge of history. So we take the stooge off the table. In my camp, Russia backs down because we send the Ukrainians better weapons than they have, and China decides to stop starving its own people. In my camp, there can be no necessary crash landing because he doesn't want one. During this period, we have to watch how individual stocks behave. We can't trust prices because we never know when someone else might be drawn to one of these three other camps because it's the overheated economy thesis. They probably sold at the rally today. They'll sell again tomorrow because this is who they are. But if you're in my camp, you're drawn to owning stocks here because there are plenty of companies that could do well, even if the more bearish camps turn out to be right. If you think Powell's a doofus and a stooge and a lackey, and we're in for Jimmy Carter era inflation, you can buy the high-yielding oil stocks like the ones I talk about tomorrow at noon on our investing call. Members only. If you think Russia and China are driving us toward a much more dangerous world, go buy the defense stocks and cybersecurity plays. They were on sale today. Think Aero Environment, Lockheed Martin, Palo Alto Networks. If you think we're headed for a Fed-mandated recession, you buy the food and stock stocks, food and drug stocks. How about my camp? Well, if you're in my camp, you buy good companies, like an AMD, like an NVIDIA. You buy the banks. They're going to make a lot more money off you. You'll get the 310 spare. Hey, you might even hit the strike. This is what happens. Good things can and do happen. Remember, banks get instantly more profitable when the Fed raises the short rates, okay, and the banks continue to pay you pennies. Hey, by the way, you can also buy tech, because tech stocks tend to do well once inflation peaks. But only profitable tech stocks, please, because the money losers aren't going to make it to the promised land. Here's the bottom line. Let the people who think Powell's in over his head, let the people who are scared to death every single morning, and let the people who think that he's a fool and has to crash land get out. And let it leave all the good stocks to us. Richard in California. Richard.
Good afternoon, Jim. I'm calling from Palm Desert. My question is Qualcomm. You had the CEO on a few months ago. I got in a little bit high. I know today was a good day for it, as the rest of the market was. But what do you feel about the future?
Cristiano Amon just won the VW contract, probably the biggest in the world for electrifying. He's also got the GM deal. The stock is selling at 11 times earnings. It's going to be a big gangbuster quarter. They own 5G. He's one of the smartest people I ever met, and I think that the stock belongs at 170, not 145, which is why I bought the heck out of it for the investing club. Remember, okay? Let the people who think Powell is a stooge get out, okay? The ones who are scared to death, get out. And the ones who think it's going to crash, get out. You and me, let's stay constructive. Mad Money tonight. GXO Logistics, XPO spinoff, reported first quarter results after the bell, breaking down the numbers with the CEO. Then Revolve plummeted today. I don't think that made any sense. I'm an influencer. I'm learning more from the company's top brass, okay? And then finally, Clorox. Hey, you know what? Don't drink it, just buy it. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.